Good morning and welcome to Real Estate Economics webinar series. Real Estate Economics is a leading provider of residential market consulting services and online research tools. We provide a webinar series covering a variety of topics of interest to home building, land development, lending, capital sources, and related industries. I'm John Mulville, Vice President of Consulting here at Real Estate Economics. This week we're going to present a special topic, which road to take? Attached or detached product platforms. In today's webinar, we're going to consider what are the current sales rates and pricing levels for attached and detached products in markets where they both actively sell. And for that analysis, we've selected 3 counties here in California, or 3 cities, major metro areas in some cases, and we're going to really compile a micro case study on each of those and see how attached compares to detached. See, is the attached product affordability able to overcome the higher ownership costs associated with HOA dues and Mello-Roos? We'll address the question, has demand migrated into detached prototypes now that the affordability for detached homes has improved so much? What are the shortcomings and strengths that builders should consider if they want to develop attached products? And what are the market advantages that new attached products should emphasize when they're competing against older detached homes, as is the case in many market areas presently? The first area we'd like to examine is the city of San Jose. This particular map shows new sales, foreclosure sales, and conventional resales of detached product only for the last 3 months. So you can see this is a pretty busy, pretty vibrant market area. Sales everywhere. Most of the attached and detached product in this market tends to be slightly older, and we'll talk to that point in a minute. The next map shows attached sales only for this same market area and time frame. So you can get an idea about the differential in terms of volume. Although the market coverage is pretty good, the attached and the detached are both well distributed geographically, particularly involving resales. Let's look at how the sales volume has compared during the last 3-month period. Detached sales volume is down 23% from 2009 to 2010. We know we had the federal tax credits really boosting sales at that point in time, and down 1% from 10 to 11. That's essentially flat in our view. Market share, and when I refer to market share, that's the percentage share between the attached and detached, has been flat or steady in this market from 2009 to 2010, but the market share for attached has actually increased 2% in 2011. At the bottom of the page you can see attached sales volume. Volume was down 23% from 2009 to 2010, matching the same numbers for the detached sales volume, but up 9% from 2010 to 2011. This market has turned into a high-priced market with price points and incomes rising quite rapidly, so many people who choose not to rent find that detached concepts are a viable alternative. The detached homes in this market are quite expensive, as we'll show here. Let's look at resales. Resale prices now, attached versus detached. At the top of the page you can see detached value ratios, that's price per square foot. For detached units only, we're up 4% from 2009 to 2010, down 3% from 2010 to 2011, so on a 24-month basis we're at exactly the same number, $312 per square foot. The average detached home in this database of sales for this 3-month period is 44 years old, and the average unit size is 1703. So I think we can definitely conclude that the old school detached homes are much smaller than most new home buyers would be inclined to look for. On the attached side, at the bottom of the page, the value ratios are flat from 2009 to 2010, $258 compared to $257, and down slightly into 2011, 3% down to $250 per square foot. In this area, the average condo age is just 24 years, so you can see that the detached market developed Back in the 70s, 60s, 70s, and 80s, the attached units came along much, much later and tend to be much newer. The densities are very suburban. The condo prototypes are townhomes, generally two-story townhomes in the resales at this time. The average unit size, 1,240 square feet. Let's shift gears a little bit and look at San Jose new home sales. Now, this is only new. In the last series, we were talking about resales, so we're switching up here. Detached new home sales volume up 42% from 09 to 010, but before we get too excited, we've got to look at the numbers. This is on a base of less than 10 new home sales per month. From 2010 to 2011, volume up 47%. Still excruciatingly low volume in this market. If you want a detached home in this particular area, you can search the entire city. You can practically search the entire Santa Clara County, and within a 20-mile radius, you are really looking at just a handful of detached options. Even on the resale market, there are not that many good quality newer homes that will compete with the new homes when they are available. On the attached side, again, new home sales only. Volume up 25% from 09 to 010. That's in terms of sales per week, 2.0 to 2.5 per month. Overall total sales are 52 to 60. So we've lost a couple of active communities during that time frame. And sales volume at 2.5 a month is flat from 2010 to 2011. Overall, sales per month, 7 times that of detached units. So this is an area that has a fair number of podium products, some high-rise. This is a city that really wants to grow up instead of grow out, and so they are much more friendly to higher density, taller structures, podium structures, and they don't want to sprawl out into the peripheral areas and provide hardly any detached housing at this point in time. Let's look at San Jose attached versus detached new home sales pricing levels. Detached prices per square foot down 8% from 08 to 09, 353 down to 323 per foot, up 1%. But if you look at what's really happening here, is there's practically no product on the new home side again. So prices have just skyrocketed here. You can see the numbers for the third quarter of 2010. That home price is $665,000. Come forward a year, $937,000 average price for a new home in this particular city. There is literally no product out of elite price ranges. There's really just no reason to price things at affordable levels. Huge price increases for the available detached homes that can be provided to the new home market in this area. By comparison, let's look at the attached. The value ratio, dollars per square foot, up 2% from 09 to 010, up another 2% from 10 to 11. Base prices up about 5% in 09 to 010. Base prices down a little bit in 10 to 11, so we're picking up some slightly larger units here. Again, much more supply in the attached market than the detached market, although the unit sizes tend to be small and the densities tend to be pretty high. So let's take a quick summary of this particular market area. Detached pricing steady in this resale market where the supplies are adequate. And the supplies are generally adequate here in the resale market. There are shortages in terms of newly remodeled and contemporary remodels. Many of the homes are older. A lot of the demand is just remaining latent because people do not want to jump in, buy a home in an expensive market, and then spend a couple $100,000 remodeling it. In terms of new home supply, the overall levels are so small, sellers are completely in command. Attached resale pricing is down slightly. However, the housing stock again is a little bit old here, going back to the 1980s townhome style. Not too much newer suburban townhome product in this area. Attached new home prices are steady. Value ratios are up on the attached side. Products include many higher density concepts. There are high rises, taller structures in this market, and that's driving some people into older detached homes. Severe product mismatch, in our view, in this particular market area. Buyers would willingly choose more detached homes if they were available, lower density attached concepts if they were available. There is a select market for high-rise. There is a select market for podiums located close to work, but many smaller households, people with smaller children, older buyers are going to select high-rises and podiums in fairly limited numbers, and there just isn't too much suburban product here. Demand is clearly being deflected out of this market, not only for price point reasons, but also for product reasons, in search of better product price alternatives and better value propositions. We can see that's taking place into the East Bay, peripheral areas, or the demand remains latent. Now the next area we'd like to talk to here is the city of San Diego. Now if you really want to compare attached and detached, we've got to go to markets where they both are active, not necessarily head-to-head, because there's a lot of locations where attached dominates in the city centers, attached dominates the city centers, and detaches in the suburbs and the periphery. So we wanted to get market areas where there's at least active competition for both of these different platforms. Here you can see City of San Diego, 3 months, July to September 2011. Quite a bit of activity. Foreclosures are not shown here for our purposes, but you can see resale homes are very vibrant in the Otay area around the city center, up and down the 5 corridor, and just really across the valley. Let's look at the attached product. Pretty much similar, a little bit more action up the I-15 and also naturally around the city center where there's high-rises have been abundantly developed in the last few years. Okay, on a resale basis, San Diego attached versus detached sales volume. Detached sales volume down 13% from 09 to 010 and essentially flat from 11 to 12. Detached market has lost share to attached, 2% from 09 to 2010. At the bottom of the page, attached sales volume down 17% from 09 to 010. Again, we're going to call a lot of that out to the federal tax credits, but up 1% from 2010 to 2011. Attached units have been picking up share a little bit in this market, 2% from 2010 to 2011. Let's look resale pricing on a detached basis, up 7% from 2009 to 2010, down 4% from 2010 to 2011. In this market area, the average detached resale, 45 years old, not too different from our San Jose area. The average unit size, 1,801 square feet, so it's 98 square feet larger, but in terms of age, it's quite similar. Down at the bottom of the page, the attached value ratios were flat from 09 to 2010 at about $263 per square foot, and then down 8% in 2010 to 2011. The condo, average age of the condo in this market, 28 years. So it's a little bit older than the San Jose market, and the unit is also a little bit smaller at 1,150 square feet. Switching now to new homes, we'll make those same comparisons in the new home market. On the detached market, the monthly sales rate up 69% from 1.6 to 2.7 per month, 2009 to 2010. Then down 7%, that's 2.7 down to 2.5 per month, so not a huge change from 2010 to 2011. Overall, numerical volume is pretty low, and so is monthly volume. Unit count in detached homes in the city, we're defining this as the city of San Diego. Unit counts are steady to up just a little bit. At the bottom of the page, we'll look at attached new home sales volume, up 10%, 2.0 to 2.2, still pretty slow, but up 10% from 09 to 2010. Down 5%, 2.2 down to 2.1 per month, 2010 to 2011. The very severe, interesting thing that's taken place in this particular market is active new home communities in this area. The unit counts have just plummeted. There are far fewer active developments in this market, and by our count at this point there are less than 100 units remaining in the active new home communities that are in the city at this time. There tends to be a few straggler units in some of the high-rises as they gradually close out, and you know what those look like. Those are usually penthouse, upper floor units that have big numbers on them, so that doesn't go far in meeting market demand. And really just a couple of developments selling out their last units. There are only 2 or 3 sort of suburban density attached communities active in San Diego at this point in time. So there's not much demand being met in the attached market down here. We'll have historically low active community counts within a very short time period here. Let's look at sales prices again for the new home market, detached at the top of the page, up 1% from 2009 to 2010, down 6% from 2010 to 2011. Now what's been happening here, unit sizes are down 13%. Since 2009, we're transitioning away from executive and luxury product back towards mainstream product that can be purchased by a much larger part of the market. We're expanding our market coverage here, getting away from the high-land residual products that were dominant during the subprime era and back toward the bread and butter, where we know people are inclined to purchase these days. Lot sizes in a 24-month period down 35%. That large lot executive product, large lot luxury product has just seen such poor demand that people are improving their densities and really designing product for the middle of the market. At the bottom of the page, let's look at the attached numbers. Value ratios up 9% from 2009 to 2010, up another 9% from 10 to 11. Again, this is a function of what is in those active communities. It's almost exclusively high-rise podium structure product, lingering units in just a couple of these things, and very poor market coverage in terms of both price and size. That's giving the impression that values are rising quite rapidly. What's really happening is there's a few luxury high-rise products left and very little suburban moderate density product. Available affordable product extremely limited. So let's summarize San Diego in terms of the attached and the detached market. Detached pricing is steady. We also think supplies are generally adequate here. Attached new home supply is already paper thin and is soon going to shrink to unprecedented levels. Severe product demand mismatch in this market. We don't think, and we know, not that many people will purchase a high-rise unit that's got kind of a select buyer profile and a financial profile of those buyers. And suburban attached products are nearly non-existent on the new home market. If you want an attached product in this particular area, it's almost the resale market's just going to capture almost all the buyers. Demand is clearly being deflected out of the city center into peripheral areas, looking for better values in the well-supplied detached home market, although, as we mentioned, the units are older and are starting to be run down in terms of not only their overall appearance, but they're lacking energy efficiency, they're lacking technological features, that sort of thing. Huge improvements in detached prices have also been pulling people out of the city center. Carmel Valley, Carlsbad, and some of these places that were dominated by home prices over $1 million are now have prices back into the 6, 7, 800,000 range, which, although steep, is fairly moderate for this particular market area. Our third area, case study today for our attached versus detached, third and last, is the city of Irvine. So this is a much smaller market area than the city of San Jose, and obviously far smaller both geographically and numerically than the city of San Diego. These are the detached home sales, kind of sprinkled over the area, pretty well distributed. Not too much concentration. Let's look at the attached sales. About the same, not too much concentration here, so we should have a fairly representative sample for our numbers in this particular time frame. First, we'll compare the resale market. This is Irvine, attached versus detached, resales generally. Detached sales volume down 1% from 09 to 010, but up 6% from 10 to 11. Market share for detached is increasing sequentially from year to year. We've had a number of new product introductions on the detached market and the attached market, with much better price points than we had, say, 3 or 4 or 5 years ago. So the detached market is pulling share away from the attached in this area. At the bottom of the page, the attached sales volume down 7% from 09 to 010, down 9% from 10 to 11. Market share down in both years. This is an area that's had quite a bit of podium product brought to market several years ago that didn't really resonate that well with people, and as suburban density townhomes and non-podium product has been introduced, the market has actually responded pretty well despite this seeming downtrend in attached product. Let's look at the price ranges. At the top of the page, detached price per square foot up 5% from $350 to $366, 09 to 010, down 5%, 010 to 11, so we're almost flat where we were a couple of years ago. Average resale home in this area, 35 years old, so a little bit younger than both San Jose and San Diego, and the average unit size fits in between the two previous case study areas, 1792 square feet. Let's go to the bottom of the page. Attached resales price per square foot up 3% from 09 to 010, down 8% from 10 to 11. Average condo is 30 years old. Average size is about 1288. So think back 30 and 35 years. This is really when Irvine first came into its own. And from the beginning, condos and single family have been developed in the master plan community format practically simultaneously. And so there's an incubator factor there where the people who initially purchased condos later on in life buy detached homes. And the unit ages are much more similar than in our two previous areas. Let's switch to new home sales now. New home volume at the top of the page. Detached new home sales volume up 364 from 09 to 010. That was a time period when the active communities went from just 8, grew quickly in 2010, and they're now at 17 active new home developments for 2011. Sales volume was down a little bit, 10 to 11, but what we're really getting is higher total sales. The sales have gone from 56 to 65 per month, but more active communities. So we've got more communities sharing greater total volume, so that's a good thing. Market share is generally split between attached and detached. If you look down below, we're getting high 50s to low 60 sales per month for both the attached and the detached market. That should be a good sign of fairly efficient market coverage in terms of unit sizes, in terms of unit prices. There should be products out there for most of the people who are interested in buying, and a fairly decent split of share. At the bottom of the page, attached new home sales volume up 200%. Again, we got a lot of product introductions in 2010, down 18% from 10 to 11. We have just a slight degradation in terms of sales per month, and also a little bit of a trail off in total sales for the entire attached market month over month. Active communities, active attached communities in Irvine up from just 7 in 2009 to 18 in 2011. Let's look at prices. Again, this refers to the new home market. Detached value ratios, price per square foot we're talking about, down 3% from 09 to 010, but up 2% from 10 to 11. Again, another market where lot sizes are down a little bit as builders transition away from the executive and luxury product of the subprime and post-subprime era back towards mainstream housing, mainstream family housing. On the attached side, the value ratio is down 14% from 09 to 2010, essentially flat, 318 down to 317 from 2011. But we've got a significant shift in product away from the podiums, which were represented most of the active new home communities in '09, and now we're back to more suburban townhomes, flats, those sorts of designs, medium density designs in 2010 and 2011 that resonate much more strongly with buyers. So let's summarize Irvine very quickly. Price and unit size coverage is much, much better in this market area. There are attached products and detached products for most buyer profiles, and so we get a nearly even split of sales volume, sales numbers between the two possible platforms. Attached new home supply is well diversified here in terms of density and type, really producing much better price and market penetration. Strong attached programming serves as an incubator to future detached product sales, and that just doesn't mean today. It doesn't mean if we put somebody in an attached home today, we've got a buyer in 3, 5, 10 years. The fact is that Irvine has had a vibrant attached market for 25 or 30 years, so those people continue to come out of attached units as their circumstances warrant throughout the past 10, 15, 20 years. So they've been incubating going back into the 80s and 90s, and it's not just something we're putting into the market today. Demand, unlike our two other areas, demand is not really being deflected to the surrounding market areas because there isn't much product south, north, east to really compete. Now that the price points are a little bit provide better value propositions in this particular area, demand is being drawn in, back in from the peripheral areas instead of being pushed out to the peripheral areas. So let's put the whole, 3 area, San Jose, San Diego, Irvine, into perspective and see what our lessons are, see what the moral of the story is, if you will. One thing we can clearly tell, really across all the market areas, is attached programs experience longer sales cycles. People will come in, they'll look, there's a little more uncertainty there, they'll come back and look, but if you talk about traffic, sales to visits, time from visit to sale, so forth, if you look at those various metrics, it takes a little bit more time. The sales process is more labor intensive. We've seen in many cases our podium products and some of our complicated structure products. At Plan 2, for example, if it's on the north side, south side, east, west, if it's on the inner part of the building, maybe looking towards the pool or the outer part of the building, each one of those units will live differently, and people want to visit. Smart buyers will want to visit each one of those and see how they feel about the orientation, the sunlight, the parking, orientation towards the pool, access to the elevator if it's elevator served, that sort of thing. So you need one person essentially conducting tours, one salesperson conducting tours, while another one mans the office. So we definitely have a greater need for sales personnel in some of the complex designs. Unit-specific differences in attached units lead to underpricing of strong locations and overpricing of weak locations. We've seen this repeatedly, where the most powerful, well-oriented units tend to be underpriced and the weaker units tend to be overpriced. And a lot of this, it's very easy to see how this transpires, because management can often see, Plan 2 selling great, we don't have to do anything. But if you dig into the micro side of the sales, you've got one side of the building selling well, one side not selling well. Some floors selling well, some orientations not selling well. So it's a much more complicated equation than which unit is selling and which isn't. Ownership costs have continued to be an issue in the attached market. We've seen more and more communities go towards master and sub-associations, CFDs, continue to be prevalent, and we think that really draws off the residual price that can be captured by the unit itself. As those homeowners' dues rise, and we all know those are going up, we're constantly advising people, keep 300. Don't use a 300 number on the HOA dues if you can avoid it, because people will see the 300 and immediately be nervous. If you're down in the twos someplace, or even better yet, under the twos, it's not nearly as frightening to people as knowing they're going to start at a 300 HOA and probably see that rise through inflation over time. If you're really going to have a site that's well oriented towards attached housing, use energy efficiency, security features, and technological superiority as a market advantage over dated detached sales. If you look at the detached market in some of these areas, the average home is 44 years, insulation's non-existent, Cat 5, Wi-Fi, security, energy efficient windows. The list goes on and on. Many of those things cannot be readily duplicated in an older detached home, even if you're trying to retrofit. So that's the advantages that you should be using as a seller of new attached product. And then, last but not least, how important is parking in your market? We've seen many areas where if you have, in San Jose you've got a vibrant Caltrain network and a public transportation network, so maybe it's not as important. But we've also seen people pay substantially higher prices in some attached developments to secure better parking. In markets where people still drive and the only way to get around is to use your vehicle, tandem parking will always require a market differential. How close it is, how close it is to your unit. This is why the suburban products will tend to always have a market share advantage over the structure product, because if you can go in your garage, close your garage, get your groceries out, and go directly into your house, that's an advantage that will be appreciated by a large portion of the buyer pool. I'm John Mulville. I hope you've enjoyed our special topic today, attached versus detached, in our case study of these three market areas. If you have any questions, here's my contact information. I'm at extension 102, or John Mulville at realestateeconomics.com. It's my email address. Please review our website for our upcoming webinar series, and view our past webinars on YouTube under Real Estate Economics. YouTube.com/realestateeconomics.com. You can see many of our past presentations and the market areas and topics of interest. Thank you for joining us today. Again, please join us for our upcoming webinars.